Consumer brand companies, as you know, typically suffer in a sluggish economy. Maybe that's what we're seeing a little bit with Disney. We'll find out, though. And in today's market, many of those distressed companies can't get bank loans or other capital. That's where private equity investors like our next guest can help. Joining us right now to talk about it, Larry Nusbaum. He's managing director and partner of Vertex Capital. Larry, great to have you here with us.
Thanks. Great to be here.
So we're finding consumer brands going more and more after what? Private equity here.
Yeah, and you know why? Because they need capital, and they're not getting it from traditional banks. You know, the banks are all tied up with the TARP money and the big investments. And in the low end of the mid-market, companies like ours, Ronco, or company brands like, look at Blockbuster.
Right.
They're turning, Burger King, A&P, a major grocery chain, turning to private equity for capital because it's more expensive capital, but it's available. There's a lot of money on the sidelines with distressed guys like us.
Why don't they just, why can't they just, you don't need that, by the way. Why don't they just sell bonds? I mean, interest rates are so cheap here.
You know what? Bonds, though, have elliptical life cycles, right? So private equity gives you money now and into the future. Bonds expire. Bonds have closing rates. Bonds have dividends and tax implications. This money is cheaper. This money is longer term. This money can sit for 5 to 8 years, and it can help companies restructure and focus on their core business.
Yeah, I was going to say, and private equity also has smart guys, right? They can actually help these businesses do what they want to do, which is succeed.
Well, I'd like to consider myself smart. I'm not sure I'm going to help Mickey Mouse right now, but if you're ready, Disney, I'm ready.
But Larry, you have the patience to sit there and wait that 3 to 5 years. You can do that. I know you say you have to, and I know that's a big thing, kind of helping some of these distressed companies. But do you have that time?
We do, and you know why? Because our limited partners, the people we raise money from, institutions, the TIAA-CREF, the major companies, expect us to harvest the brands, grow the business, and build real value. And if they're not going to wait, you know, the short-term fix, that's not in today. It's about long-term value. And so we want to employ people, but we also want to fix brands that have longevity, not just give you the quick Band-Aid approach.
And in an environment where we keep, well, I mean, we're certainly not losing the jobs like we were, but we certainly need jobs. I mean, that's part of what you guys are doing, kind of preserving companies as you can, making them stronger and saving jobs here.
And you know something, a little known fact, 68% of the employable public out there right now, the good, hardworking, college-educated and not college-educated employees are with the companies that are in my sector, the under $200 million. We're the ones that are actually fixing the brands and employing the employable, and that's what we're looking for.
Let me ask you about the exit, though, because you guys want to stay in for 3 to 5 years, right? And an exit's been tough lately. The IPO market is weak. What do you see when you look to the future? Do you just think things are going to get better? And also, don't you have so much in the pipeline that you have like a little too much on your plate?
It's a very busy time, but I will say one thing. IPO markets, it's expensive. There's a lot of litigation. There's a lot of accounting fees. The Sarbanes-Oxley. It's very onerous to be a public company today. I would not want to take one of our companies public today. It used to be in vogue in the last 10 years. You want to get an IPO. That's an exit for everyone and all your LPs and the fund itself.
What's your new choice? Sell it to another private equity company?
Honestly.
Or another company.
Strategic buyer?
Strategics or larger private equity LBO firms, because we're in the low end of the mid-market. So if I can grow a business, let's say that was upside down, losing $5 million, and in 5 years I get it to make $5 million, like we did with Ronco, or we did with Cosmedicine. You have these famous brands that lost their way, build them to cash flow positive, and then in 5 years sell them to a bigger housewares company.
It's kind of pocket change for companies that have so much cash on their balance sheet at this point.
And you know what? They're going to continue to build cash because everyone's afraid of diversifying, and they should be.
So what kind of companies are you playing with right now? Where are you seeing? You say you're really busy. So what kind of companies?
Oh, we're looking at fancy food. I really think the wave of the future, and I think you're going to see a lot more downturn after the Christmas selling season. Again, I'm crossing my fingers and wishing the best for consumer spend reports, but let's wait at 3 more months.
You're very bearish, basically.
Look, I'm bearish on the small businessman because you can't get a loan from a Wells Fargo. Wells Fargo is one of the few that is lending. You can't get a loan from Chase Manhattan. You can't get a loan from the major banks. The little business owner can't get traditional mortgages, APL, asset-based lending. So I'm concerned about the fancy food sector. I'm concerned about high luxury item retailers like Bloomingdale's, players like Sephora in the cosmetics area. I'm seeing the opportunity in the down market, the Sears coming back, and I really question where we're going to be. But I see retail as a fertile sector for distress.
The opportunity to go pick those companies up. But what do you have right now in the pipeline? What are you working on that we're going to see get better because of your influence?
Okay, the secret sauce. I have to pull out the envelope. envelope,
Yes.
please. Okay, so we are looking at two consumer businesses, the cosmetics and fragrance area. You may think highly competitive with P&G and Neutrogena and J&J in that space. There's tremendous prestige brands that are little businesses that have a secret sauce that we're looking at right now. The other sector is fancy food. I think, everyone makes a brownie, but who's got the next real Toll House cookie? And I'm looking at fancy food businesses that there's specialized, fancy food that sell to Dean and DeLuca's or high-end specialty.
Right.
That I want to bring what we call down market. I like to see prestige luxury brands that I can bring down market to the masses.
The areas you don't even want to touch here?
I would tell you. Telecom. Do you have dice? Who wants to throw dice? It scares the heck out of me. The internet.
You know who does? Harbinger Capital. Look where it got them.
Not a great week. Not a great week.
Oops.
Got it. Hey, Larry, we're going to leave it there. Thank you so much.
Thank you.
Larry Nusbaum, everybody, Managing Director and Partner over at Vertex Capital.